Morning traders and welcome to the channel. My name's Ryan. If you don't know me, I've been a trader now for 6 years. I've been interested in the market for 14 years and just recently started my YouTube channel. So in this video, in this series, which I'm going to be doing every week, we're going to take a little outlook on the SPX, on potential setups, as well as the DXY. So if you do like the video, make sure you hit that like button. If you haven't subscribed to the channel and you like what I say or like my analysis, at the end of the video, then make sure you hit subscribe. That would really help me out. So let's get into it. Let's get into the SPX first, and then we'll go into the DXY. Now, the SPX has been on an intraday downtrend. Well, I say intraday. It's been on a downtrend for about 2 weeks, or a corrective from your primary uptrend that has been happening for the past few months. However, we're seeing some bearish price action. Now, if we look at the chart from this section here, our most recent price action, we've had impulse, correct, impulse. At this point in time, at a hammer bar here, I thought this might have turned into a nice corrective, very similar to here, for continuation to the downside. However, we've had some bullish action here. We're coming back for a potential retest of this area, but price action seemed quite bullish. So when we broke through and we got to this hammer bar here, I actually thought there was an argument there, if we did push on, that the SPX could change from this shorter term downtrend and continue with that longer term uptrend. However, that hammer didn't take. There was no momentum there from buyers. Sellers again took control, and we had this large bearish bar. The last 12 hours on this 4-hour chart, it looks to be, again, we're in that corrective for continuation to the downside. So for that bias, your bias probably now definitely has to be, it doesn't definitely, but your bias probably has to be to the downside, because we are on a downtrend, and waiting possibly for that 20-period catch-up, breaking out of this structure, this corrective structure, for continuation to the downside. Now, if we look at the difference between this pullback and this pullback, it's slightly different. There's lots more buyers coming into this than we have here. So I would wait to see this pullback play out before getting that confirmation, whether it be a break below, before confirming that downtrend bias. So a break and close underneath this area, a break and close underneath this area, or if we end up in that corrective, a break and close underneath that corrective would be a decent sign that this market wants to continue to the downside. Another possible entry for a downtrending bias is we've got a V reversal here. And again, we're getting that corrective for a possible breakout to the downside, a break and close underneath this area. So a V reversal, need to digest this impulse to the downside. I use that 20 period as a visual guide to help me understand when pairs are properly digested and pulling back from that impulse and possibly ready again to move in that trending direction. So my bias for the SPX is certainly downside movement. We do have NFP coming up on Friday, which will move the markets. However, as a purely technical trader, I'm just looking at what I see on the charts, and at the moment, it certainly looks bearish. But let's have a look at a bullish scenario. If we were to see some bullish price action, like we saw previously here, this could turn into a double bottom. I would think that's only really confirmed initially if we break above this resistance zone, and certainly if we break above this trend anchor here. So it's got a little bit to go for me to be a bit more confident in saying SPX longs. Obviously, if we have decent data and the market likes that decent data on Friday, we could see a bullish pressure into that SPX. We expect that. However, at the moment, we need a break and close above these areas to be a bit more confident. So yeah, personally, I would look for that digestion period and continuation to the downside. In terms of your next area potential support, you're looking here on the daily chart. So we've got a slight bit to go. We do have that 200 underneath, as well as dynamic support to price. We are counter trend, because if we zoom out, we're obviously coming from this large uptrending move. So it still is. This could be a secondary trend, if we talk about Dow theory, within our primary trend. So within Dow theory, you've got 3 trends: primary, secondary, and tertiary. This could be our secondary trend within our primary trend. However, it does look bearish. And I think you're next, if you are shorting the S&P, look at this area for potential support to price, and that 200 as well, because you do have barriers, because technically it is counter trend. Right, let's have a look at the dollar. So the dollar's been bullish, very bullish recently. I've liked it for quite some time. I've been calling longs for quite some time, roughly around this area here. Now, daily chart looks good. There is an argument here. If we put a Fibonacci on it from the start of this impulse to the end, we are basically tagged off this support area, which coincides with the 50% level, which the DXY is known to like this 50% fib area. So we could be in this impulse correction back to that 50, slight rejection candle, not technically a hammer bar on this support area, on that 50, on a bit of volume, and we could be potentially moving to the upside as trend continuation. Now, the only thing I would worry about from the daily chart is because of this price action here, we may be turning into a complex corrective before continuation to the upside. That's not confirmed. This is something that I possibly have on my mind. If we do obviously get a break above these highs, then that gives you added confirmation. We don't really have a good intraday trend anchor. If we look down at the smaller time frames, we could look at this area for potential a bit more confidence in the dollar wants to move, but I would just be aware that this turns into a possible complex corrective on the daily before it moves to the upside. NFP will affect the dollar. There's no doubt that this can move on from this 50% area and push on for trend continuation because the dollar has been on an uptrend. However, just be aware that it may turn into a complex. And obviously, if it fails, in terms of dollar bearishness, if we have a break underneath this 61.8, which you would consider the line in the sand for trend continuation, possibly you look at dollar shorts. But again, as it is counter trend, you've got a lot of resistance to your short position there because we have been on an uptrend. My personal bias is I think that the dollar is long, but I have a sneaky suspicion, I might be completely wrong here, that this turns into an ABC complex corrective. Let that 20 catch up on the daily for continuation to the upside. And I think that would be better for the dollar considering where we've come from. Right, guys, if you like that video, make sure you like it. If you like my type of analysis, I try to keep things simple. Make sure you hit that subscribe button. If you're looking to take your trading to the next level, take a look at the link in the description below. Spent 2 years developing this website and it's just kind of gone live now. One of the best things is we give away a $50,000 FTMO challenge to one member every single month. So if you're interested in that, 7-day, no credit card, free trial. I think it's a great platform, certainly rivals the best in the industry. And yeah, check the link below if you're interested. All right, guys, I'll see you next week for the next one. Trade safe. Peace.